Yes, you can do 100% financing when using your VA home loan as long as you have enough entitlement, but you still have to pay for closing costs, and that's what we're covering today. So how do you pay for closing costs and what options do you have? Yes, you still have to pay closing costs even if your service connected. The only fee that you don't have to pay for if you have a 10% or higher service connection is what's called the VA funding fee, right? That's a fee the VA charges in order to use the VA home loan if you don't have the 10% or higher rating. Furthermore, when it comes to that, it depends on if you're using the VA home loan for the first time or if you used the VA home loan multiple times, and if you're putting a down payment. All of that is going to be factored in. The VA funding fee is the only fee that can be rolled into a mortgage on a VA home loan purchase. But do note that on a refinance like a cash out or an IRRRL, you can actually roll the closing costs in. That's why, there's just two sets of thoughts that are out there, especially when someone's buying like, hey, I'm just going to roll my closing costs in. You can't do that. And we do actually get that question all the time. So understanding closing costs and how much money you actually have to bring to closing is going to be the first step in understanding the journey. So the average closing cost across the country is about 2 to 3% of the purchase price. Now, we really see closing costs on properties over $300,000 on average run around 2 to 3% of the purchase price itself, not after down payment, because the title and all that stuff is going to be based on the purchase price. Now, when you go under that 300,000 mark, the thing is that fees really don't go down from underneath that. So the closing cost percentages are still going to be a little bit higher. Now, with that being said, I want you guys to keep something in mind as well. If you're working with the top, I'm going to say this with the ear bunnies, top VA lenders in the country, then you're actually paying 5 to 7% in closing costs because you're getting hit with a lot of junk fees. And plus, they have to spend a ton of money on marketing, and the margins on VA home loans are not exactly that big. So on average, they have to charge you a significant amount of more money. So please stop doing that, because we see too many people's life savings get wiped out buying a home, and we're like, why did you do that? But they just don't know any better. So this is why we create these videos. So please hit the like and subscribe button and share our information with the veteran community. Another thing that I want to mention is that VA loans with some of the bigger institutions take about 45 to 60 days to close, which is another hidden reason why veterans' offers are not getting accepted. But nobody wants to tell them that because they don't want to legitimately steer them away. But do your research, do your homework, and understand the lender that you're working with. What are their real turn times? How fast do they get things done? Is it more of a one-on-one, or are you calling a call center? That's going to dictate your experience. So the typical closing costs that are involved in the transaction and how they get to that 2 or 3% is going to be based on a couple of things. Now, this doesn't typically include the 1% origination fee, because that would be another percentage that would be added on to the loan. But you're going to have things like an appraisal fee. It's a third-party fee that's paid to the appraiser that's signed up with the VA. You have credit report fees, survey fees. You have title insurance, right? That's making sure that when you take ownership of that property, you're actually taking it free and clear of anybody trying to claim interest in that, like some cousin Ed coming out of the woodwork saying that, well, I should have inherited that property. I want that property back. Title protects you against that. Same thing with like mechanics liens. Like, let's say the sellers had some work done on the property. They didn't pay the contractor. You close on the house, and now there's a lien put on the property. Well, as the new owner, you're not responsible for that. But if you didn't have title insurance, then you would be responsible for it. That's what it does. You also have government fees, which are going to vary widely depending on the county and the state that you live in. Some places have both. And again, they can change widely on which county you go to. You can go one county over and pay no fees, or go in one county and pay $10,000 in fees. It's all going to be different. So just know what it is. And also with VA home loans, you do have to set up taxes and insurance in your monthly payment. But do note that if you do qualify for a property tax exemption because of your VA disability rating, then the lender can set up your payment without factoring in escrows. Not only that, they can actually qualify you without property taxes, which is an awesome feature. So let's go into the options you have to pay for closing costs. So some of them are going to be obvious, like, hey, I got checking savings account. It's liquid money. You can use all of that for verification. Now, I want you to note that lenders do look at the last 2 months of bank statements or the last quarterly statement for retirement accounts. So if you have unusual deposits, they're going to ask for you to verify it. So some of the things that are going to come up with this, okay, is that if you have cash on hand, I have buddies that owe me money. I don't personally, which is great, but there's people out there like, hey, I lent somebody 10 grand. They just gave me $10,000 and I deposited that in my account. Voila, I have money for closing costs. That's not exactly how it works, okay? The way the lenders look at it is they look at the last 2 months. They're going to look at all your deposits, especially also they're going to look for any like non-sufficient funds that happen. That is also actually a big red flag for denying your loan. But that's why it's important to maintain and understand your budget and credit and all of that fun jazz, or at least have a credit card attached to your account that can pull so you don't get any NSF fees. But back to this. So cash on hand, if it's deposited and it's more than 2 months out from your bank statements, like your transactions, then that money will count. If you sell something, like sometimes people are like, well, I have collectibles. I want to use this for my closing costs. Or I sell a car. A lender's going to need all the documentation around that to be able to use that money. Now, if you do have, like, let's say a money market account or stocks, they're not exactly pure liquid because you can't just go into your account and transfer that money. There's a process of actually liquidating and selling that. So once again, you're going to take that money that you have in those accounts, transfer it to like a checking or savings account. Now you have that, you can use that money, but you're going to have to document all of it. Now, the other part that you can do is leverage a TSP account or a 401k or an IRA account, right? There's different ways that you can leverage them. There's borrowing against them or liquidation, right? There's obviously financial implications to everything that you do. So you definitely need to talk to a financial advisor, talk to the company, and see what's right for you, because there's people out there that are doing VA assumable mortgages. And if you can save, 700, 800, a million, two in interest, why wouldn't you do that? So people are thinking, should I liquidate? Should I not? Can I borrow against my accounts in order to get that money? Which, again, it's going to be up to each individual person's financial position, how your taxes are structured, and what you can and can't do, and the penalties around that. Now, gift funds is another great way to be able to get money. So if somebody's willing to give you a gift, anybody can give you a gift with a VA home loan. That's the awesome part. Other loan products, it doesn't work that way. But VA loans, anybody can give you a gift, right? So even if somebody had cash on hand and they put it in their checking account and gave it to you, guess what? You can use all that money because VA loans do not require a donor's ability to fund. And what that means in plain English is that if I give you a check for $10,000, all they need to show is that check clearing for $10,000. Because other loan products, what they're going to ask you for is that if I gave you the gift, they're going to ask for my bank statements. And if I did a cash deposit or I borrowed money to give you a gift, then it wouldn't work. Then you wouldn't be able to do that. That's one of the reasons why VA home loans are so phenomenal with that. Now let's talk about a couple strategies for getting closing cost credits. And then there's a difference, right? There's paying for closing costs and what options do you have? And then you have also closing credits are very different. So you could do a couple of things, right? This is an obvious, it's obvious, but sometimes it doesn't necessarily work. If you're buying a place for $300,000 and the closing costs are $10,000, you can make an offer on a property for $310,000, ask for $10,000 back, and voila, closing costs are paid for. The challenge is that what if the appraisal comes in low and you don't have enough money for closing costs? We've seen it happen. That's why it's important that you work with the right team that can help you go through that. Now, seller credits on VA home loans are capped at all closing costs, including prepaids, your escrows, and up to 2 discount points to bring down the interest rate. A seller can pay for all closing costs. Again, all closing costs, even if you're buying a $100,000 property and closing costs are $50,000, all of it could be paid for by the seller. Because a lot of people tell you there's caps, there's not. But there is a cap on what you can get after closing costs, which is a 4% seller concession to pay down personal debt, credit cards. We just did that for somebody. We paid off $10,000 of the car. So that was awesome to be able to do that. And that doesn't happen as often as you would think. If you're like thinking like, yeah, this is going to be awesome, I can get all my debt paid off. It really depends on how much credit you're going to get from the seller. So again, all closing costs plus 4%. A lender can give you a credit as well. I don't recommend it because interest rates are already, kind of where they're at. But if you try to get a credit, the rate goes even higher. It's just not worth it. Agents sometimes give credits through rebate programs. So that's something you can look into. And also you have what's called tax proration. So you live in an area where the taxes are paid in arrears, meaning if you're buying a house in 2024, you're actually paying 2023 taxes. Well, in that case, the seller is going to give you customarily, they're going to give you a credit for the time they lived in the property. So when it's time for taxes to be due, then you're going to have that money set aside. So there's definitely a lot of options that you have as a veteran to purchase a property. And not only all of that, there's also grant programs like down payment assistance programs. We're not covering that today because there's every program is different, and there's definitely a lot of limitations with those programs that we're not even going to go over. But if you guys have questions, please drop them down in the comments section. You can schedule a call with us also in the description. So you guys have a great day, and I'll talk to you soon.